in this situation. I think they can cede the credit risk and the capital responsibility to a partner. And it's not a binary situation. It's not either Target owns it or they sell it. There's a spectrum of solutions between those two alternatives, and I think one of them can be chosen that gives Target all the control it needs, a revenue stream, and an important service and marketing tool for its customers.
I mean, I think I think the analogy to real estate is a good one. We proposed something with respect to Target's real estate, and the company looked at it as a digital outcome. It was either yes, exactly as Pershing described, or no, it doesn't make sense at all. And the answer usually lies in between. And I think the same thing is true on the credit card side. There are transactions in which Target shares some more credit risk, but they get more reward for taking the risk. It's not a completely yes or no outcome. There's a question for Jim Donald. Food retailing has low margins on the one hand, but high volume on the other hand. Is this the right business for Target to push into at this stage?
David Glass once told me, David was the former CEO of Walmart, after I had started, I guess about a year and a half, he said, I don't want you to think that we brought you in here to build a supermarket business. We brought you in here to drive foot traffic for the general merchandise side. And so I would tell the individual that asked that question that I believe it is the right business, that they're already into it, number one, but number two, I think it can actually enhance what Target stands for with regard to the brand, with regards to quality, and with regard to being in the business of being a mass market.
Question from the audience, yes.
Hi, Bill. I was wondering, did you do any comparison studies versus Target's other competitors regarding management ownership and how those companies' stocks perform? And if not, does maybe Ron have any advice on the amount of stock management and the board should own and have some skin in the game? Because it is quite surprising that the current management and board has very little skin in the game, and I think that that would make a big difference.
We didn't actually, frankly, the numbers were so striking, I didn't feel a need to do a benchmark versus other retailers or other companies. You know, over time I've seen it, it's human nature, it's incentives. You know, the bigger the stake you have in a company, not just options you've been granted for free, but when you've reached into your pocket and written a check and you've bought a share of stock on the market, I think people think about that investment differently, and they think about it every day. I think it makes a difference, but I defer to Ron. I'd love to hear his points of view on ownership.
Bill's point was something I learned, frankly, I learned from my grandmother. She understood if you owned it, you cared about it. Compensation plans, all of you who've read companies' proxies, the SEC description of compensation plans go on for 30 pages because we've created a set of very complex, typically very multi-layered plans, and the extent to which the value of that compensation is directly linked to real measures of the company's performance gets buried both within the description and often within the incentive compensation plan. So direct stock ownership is one critical aspect. The other critical aspect is how the entire package ties what management takes home every week to how the company performs. And it's equity ownership, and it's more directly payback. Making those comparisons is something the SEC has been pushing every company to do. So far, the reaction has been simply to expand the number of pages, the number of tables, and most importantly, the number of footnotes. The kind of comparison you're asking for is both difficult to do, but I will tell you that every executive in the end knows what the answer is.
Michael, do you have a point on this?
I've always bought shares in companies in which I've gone on the board with my own cash in the market. I don't think I've ever sold any of those shares, although from time to time I've transferred some to my foundation. You always have to have skin in the game, I believe.
Another question from the audience. Up top there.
Yeah, two-part question. First part, Pershing Square, April 2007, made a series of trades into Target. Over those 3 months between April and I guess around May, Pershing accumulated about 1.5 million shares and then exited and did that three or four times. Mm-hmm. And then in the middle of May began to accumulate Target stock.
Why?
Well, yeah. So my question, first question was, it seems like there was a change in strategy. If you can talk about what the strategy was in the spring versus, I guess, in the summer of 2007, and a question for Professor Gilson regarding.
Let me do that one quickly, and then if you can ask Professor Gilson the next question. So keep the microphone. We were restricted because we were buying a stake in the company with the intention to have influence over the way the business was organized. We were advised that we couldn't buy more than $62 million worth of stock per entity without making a Hart-Scott-Rodino filing. So the reason why our initial position was largely in the form of stock, largely in the form of options and swaps as opposed to the stock that we own now is because of those restrictions. After we made a filing, we could then buy the common stock. So what you saw was we'd buy 1.5 million shares, $60-odd million worth, and then we'd sell that stock to a Wall Street firm that would write us an option on it. It was a way that we accumulated the position. But if you look at that, if you look at not just the stock, but the stock and the option and the swap position that we accumulated over time, our net exposure to the company grew through that entire period. We were never actually buying. We were always increasing our economic stake, but the means by which we had to do it was the way that we described, largely because of this HSR issue. So if you just looked at the trading report for common stock in our proxy statement, it will look like we're buying and selling. We're not day traders. We're not short-term investors. Our net stake in the business grew over time to become a much more meaningful number, but we were limited by the HSR rules. By the way, if you can get those rules changed, they're a bit annoying, and we would appreciate it. But maybe your question does that help you on the stock?
Yes, thank you.
Could you try and then go ahead for Professor Gilson.
So for the professor, the question is the importance of a long-term investor. Well, actually, do you believe that Pershing will be a long-term investor in Target, and if you could talk about the importance of a long-term investor as it relates to good governance. Thanks.
I'm trying to think about the right way to say that I agree with you in an eloquent fashion. Look, what we want shareholders to care about, when I say we, the governance committee, is the long-term value of the company, because from from an academic circumstance, we care about the value of the stock, but we care about everybody else, every other stakeholder who does business with the company. If the company grows over the long term, the shareholders do wonderfully, and so does everybody else. Long-term shareholders will have the same view of that goal as everyone else does. Distinguish that from people who are trading on hiccups in the market. My finance friends will tell me they do a really important job. They're really an important part of pricing for the financial market. But this is not about the financial market. This is about the long-term value of the company and the value it creates for everybody who does business with it. So my interest is long-term. What I know about what Pershing Square has done has been focusing not on capital structure, leverage recaps and the like, but it's rather been on the operating structure of the company. My understanding is they've held their shares for periods quite longer than others. But keep in mind, the people who are going to be in the boardroom, other than Bill, isn't Pershing Square. It's